Okay, everybody, welcome to a brand new session of the volume profile formula. The title of this session is Line in the Sand. We're going to be looking at another trade idea, and today we're going to be focusing on the composite profile. Let's jump into it. Here's what we're going to be covering, just a couple topics. We're going to be looking at the composite profiles, and we're going to be looking at line in the sand. So let's jump into it. Starting off talking about composite profiles. Up until this point, we've learned about the daily profile, the microcomposite profile, and now we're going to incorporate our final volume profile, which is the composite profile. So looking at composite profiles, a composite profiles is combining months and years worth of data. So similarly, with the microcomposite, when we combine 2 or more days, we get a microcomposite. Same thing, just instead of being micro, this is more macro. And so instead of bringing in days or weeks worth of data, in this case, we're bringing in months, and in most cases, we're bringing in years worth of data. Now, we draw composites by anchoring to a significant high or low, making sure to include the full range of the traded days. I'll walk you through this, but just to get some clarifying points out. Composite profiles are displaying key LVNs and HVNs. Like we've been talking about this entire section, we're learning these tools, and then with these tools, we want to identify what that information is, why that information is important, and then we want to look for repeatable patterns that we can exploit. And in the case of composite profiles, we're going to be focusing in on LVNs and HVNs. I'll be explaining what these are and how we're going to be using these. Similar to the microcomposite, there's other things that we can use the composite profile for, but this is just going to be one specific example that we can look to drill into, and we can look to start developing some trade ideas around. So let's jump in and switch to the charts and take a moment to set this up right now. For this, let's use tradingview.com. Okay, switching over to TradingView. Here we have just a blank chart, and this is set up to daily. So each one of these candles are a day's session, and you can see this is bringing in a lot of information here. No profiles on this. These are just daily bars. It's not necessary to put individual daily profiles on this. You can if you like, but it would just be messy, and we're not looking at any of that individual profile data. So we can zoom this out quite a bit. Now, like we were just saying in the slides, we want to draw these composite profiles by anchoring to a significant high or low to include the full range of the traded days. So looking at this chart right now, can you identify any key highs or key lows that we can anchor a composite profile to? Takes just a moment. You can pause it if you'd like to look at this and see if you can come up with it. But when we're looking for these key areas that are highs and lows to anchor to, these should just be very obvious places in the price action. So we could look at, this is all-time highs. That's a pretty significant high. Down here, here's a significant low. Just a place where we've hit a bottom, and then that was a real turning point in the price action. Here's a significant high. We put in a high here, ushered in that big move to the downside. If we're looking at maybe a spot like this, a place where we've pushed off of, but not that significant. We want to find just very significant places where the market found turning points. If you're familiar with observing pivots in the market, this is what we'd be looking for, just those key pivot points. And this shouldn't be something that is hard or that we have to use our imagination on. This should just be very obvious places. Now, the next thing that we want to do is make sure that we're including the full range of traded days. So we could say that this high here, all-time high, is significant. But if we anchored our composite to this high right here and included the rest of the action, we would be eliminating all of this behind us. Now, all of this action where we've traded, we wouldn't be including anything behind. So that would be an issue. So even though this would be a significant high, that's not where we want to anchor our composite profile. We want to start our composite profile, and we want to go all the way through to the end of the action. But we want to make sure anything in there that's traded, we want to make sure that that's included. So let's draw one, and you can see what I'm talking about here. Going into our indicators, same thing as before with the microcomposites, we want to use this fixed range volume profile. And so we could say that this is a significant low back in here. We could anchor to that and then bring that all the way through to the most recent action. And then here, anything that we're trading, this is all included inside of this. And until the time when we come all the way down into this area again, then we would have some action back here that we would want to include. And then we could bring this and adjust this composite profile. So this doesn't have to be as precise. With the micro composite, if we get that wrong, we're going to be seeing the information incorrectly. This is a lot more forgiving because we just want to make sure we're including enough information. And this should be a fairly easy thing to draw and to learn. The main thing is just anchor it to any significant high or low, and then just make sure anything in the foreseeable action that we're trading. And you can see this is a huge range here. And we don't want to be adjusting our micro composite every single day. We should just be able to set this and then just make sure that we keep including the most recent data. So if there's a new day, then we would want to include that. And I don't believe the settings are available inside of TradingView to just continually include the next day, but you can just adjust that portion of it. But we shouldn't have to adjust the whole profile very often at all, really. Okay, as far as settings go, let's just take a look at the settings for this. As far as the inputs, we want that ticks per row, and we can set that to 1. Now, I'm going to show you some examples of this, comparing it with Sierra charts, because this is actually not to the tick data at all, and this isn't going to be very granular. And these are just some of the limitations inside of TradingView. TradingView is a really good platform, but it's just very retail, and it doesn't give you some of that professional quality that you get with a more professional charting package with something like Sierra. But we can do that. The value area doesn't matter for this. You don't even have to highlight it if you don't want, but you can keep that to whatever it is if you'd like. We're not relying on this value area at all. And then same thing with the width of the box. You can adjust that for your screen. Everything else should be pretty fine. Like I said, we're not relying on this for anything except for HVNs and LVNs. Okay, this is how we draw it. I'm going to talk more specifically about HVNs and LVNs, but just since we're here and I want to show us how we can mark these off, HVNs are high volume nodes and LVNs are low volume nodes. So as you're looking at this composite profile, not taking into account the value area, the point of control, none of that matters to us. We're just looking at these areas of low volume and these areas of high volume, like this. Now, this is a very zoomed out chart. This is a daily range. So we're not going to be trading off of this as active traders. So what we need to be able to do is to mark off these levels, and then we need to mark these on the chart that we're actually trading on. And the way that we can do this is we first want to just be able to mark these off. So we can go into the toolbar and select a horizontal line. And then as we put these down, we can mark off these HVNs, and I do these with green lines. And then we can do the same thing with our LVNs, mark those off, and then we can just change the color of those to red. So that's how I'll mark those off. And then we'll just want to put each one of these on all of our HVNs, and then we'll want to put one of these LVNs on all of our LVNs, one of these dotted red lines. Okay, that's how I have mine set up, just like this. And when it comes to drawing HVNs and LVNs, one thing we don't want to do is we don't really want to use our imagination too much on this. As you're looking at the profile, there would potentially be plenty of little tiny divots and little tiny peaks, but we just want to stick to the ones that are obvious. So we don't want to stretch our imagination to try to fit in LVNs and HVNs. We just want to rely on those significant ones, the ones that we can see are clear. And then if you have to wonder or try to stretch it, probably just skip it for now and don't mark it off. And we'll notice that happens a lot as we get into all-time high prices, because these LVNs and HVNs are very well established. We've traded through this area a lot over time. And these areas left behind of low volume and high volume are very well established. When we get into all-time high territory, we're going to see LVNs and HVNs, but it's not a function of truly low traded area and high traded area. it's more of a function of we just haven't spent much time there. So it's more difficult to understand, is this a low volume area uh, because this is an unpopular price, or have we just not been up there enough and not traded that area enough to develop out the profile. So keep that in mind, especially as we get into all-time high territory. Let's jump back to the slides now. This is the main thing. And one other thing to keep in mind is, in an effort to make your chart not incredibly noisy, this range goes on for a very long time. So we can adjust our LVNs and HVNs, and we can just keep in line what is the range that we're sort of in. As a for instance, the prices down in here and the LVNs and HVNs down in here, this is hundreds of points away on the S&P. We don't need to be marking those off on a day where we're trading up in here. If and when the market starts tanking and we get down into those lower prices over maybe the course of a few weeks or so, then when these areas become more in play, we can just bring those levels down and adjust them. But that shouldn't be something that we have to do uh, daily necessarily. Okay, here's how this is. Let me slip back to the slides, and we can talk more about HVNs and LVNs specifically. Okay, talking about LVNs and HVNs. LVNs, as we've already said, these are low volume nodes. And this is just a profiling term. So in old school profiling, they came up with this phrase of LVNs and HVNs. LVNs are low volume nodes. Now, LVNs are unpopular prices. We can expect price to move away from these areas, and they work great for entries. Keeping in mind that the market is trying to match together buyers and sellers. And so when we see these spots where there's very low volume, we can look at that as unpopular prices. Now, I said this earlier in this training, specifically in this section, that for each of these profiles, we have trade ideas and unique ways of looking at it. And we don't want to confuse that these trade ideas translate between the different profiles. So one of the things that makes this work is because we're bringing in a lot of data, a lot of days. And when we see these LVNs over the course of weeks and months and years, these are truly areas that have been traded through a lot, but they're not being accepted. They're low volume. Now, if you're looking at an LVN just on a daily profile, well, that's a very recent amount of action. So there might be an LVN on a daily profile that isn't significant at all. It starts off as an LVN, and as the day goes on and that profile develops, it just gets filled in. And it was an LVN, and now it's not. But when it comes to these composite profiles, these are very well established LVNs. So keep that in mind. And they're great for entries. Again, understanding that we don't like these prices. So we're likely to test these areas and then to move away from them. Now, HVNs, on the other hand, these stand for high volume nodes. And HVNs are popular prices. We can expect that price targets these areas and spends a lot of time there. And these make really great targets. Don't confuse this. And I see this happening quite a bit online where people are doing something with the profile and they understand that the point of control is important. And the point of control, in a way, is a HVN, right? That's a popular price. It's where we trade a lot. But these don't make good entries. And the reason they don't make good entries is because we're if we are at an HVN, we are right at an area where the market is doing business. We're accepting those prices, and we can expect a lot of chop and a lot of movement around those HVNs. And so when we get to those HVNs, entering in there can lead to a very high likelihood of just getting chopped out. But when we're away from those high volume areas and we're on our way to revisit them, they make really good targets. So that's how we want to use these LVNs and HVNs, and we don't want to mess these up. We don't want to be looking to enter at the high volume. We don't want to be looking to necessarily target the low volume. We want to flip that. We want to be looking to enter at the low volume and then target the high volume. And that's really all we need to know to execute on the line in the sand trade idea. So looking at line in the sand, we're looking to enter at LVNs and then to target the next HVN. That's really it. So we have this composite profile. Without this profile, we can't see these LVNs and HVNs. But once we use this tool, we get these beautiful places of support, beautiful places of resistance, and these amazing places where the market will target. And this is the repeatable action. When we get to these areas of low volume, if we are above an LVN and we come down and test it from above, as long as we're holding above that, we can look to enter on that LVN and then target the next HVN above us. If we break down that LVN, we can look to short the LVN and then target the next high volume below us. And that's why this trade idea is called line in the sand. Because as you look at this and as you start observing this, you'll notice it's like this line in the sand, which the LVN represents, separating out two likely places that the market is going to go. And just thinking through this logically, if the market's trying to match together buyers and sellers, we could understand that these areas of high volume are likely spots for the market to test and to trade around. And as you'll see as we look through some examples of this, and as you might have already noticed, those LVNs are separating out distributions. So we don't just randomly have LVNs, we have LVNs, then on either side of that, we have high volume. Let me flip back to the charts and we can make those observations. Looking back at this composite chart here, you can see what I'm saying, where we have this LVN, and then on either side of that LVN, there's high volume. We have an LVN, and on either side of that LVN, there's high volume. So that LVN is the line in the sand that's separating out the higher volume on either side. And that's what we're looking for, and that's what we're looking to trade off of. Now, I want to make some comparisons here because there are going to be some limitations to TradingView, specifically just with the details that we're seeing. And this would be maybe a good spot to start. So you can see there's this high volume right here. And on TradingView, it just represents the 71, the 71, 75. So the LVNs are typically more specific, and then high volume areas are a little bit more of an area because there'll be a specific peak where maybe the tip of that high volume is, but on all around that peak is going to be popular prices. So we can identify it as the peak of it, but we just understand that this whole area right here is actually high volume. Doesn't really work that way with the LVNs. Typically there's an LVN and then it's a more of a proper cutoff place that's separating out those levels. And then the high volume is a little bit more noisy. But either way, if we're looking at this on TradingView, we can see this high volume right here is the 71, and then down below this is the 0750 for this LVN, and then down here is the next HVN. But let's look at these couple right here. I'll switch to Sierra, and then we can compare. Okay, looking at this with Sierra now, it might look radically different to you, depending, but the main thing to keep in mind here is one, the profile is just on the right-hand side instead of being on the left. And this is set up in more of a heat map style. So it's not highlighting the value area, it's just blending everything in. And then there's a heat map where it gets to these darker colors, darker shades of red with the lower volume, and then it'll branch out into lighter colors with higher volume. So it's just a personal preference. It's nothing to do with the actual methodology or the trade idea or anything like that. The main thing I'd like to highlight though is when we were looking at this high volume on TradingView, you can see how it looks here on Sierra. And if I was to take off those levels, it's much more detailed. When you're looking at it on TradingView, right in here around this 71 area, it just gave us the peak of this high volume because it's much more aggregated. It's not really bringing in that data to the tick. You're not getting that refinement when you zoom out inside of TradingView. And so it's not the end of the world because on my side, I'm seeing the 78 down to the 60 being the main part of this high volume here. And then TradingView is basically splitting the difference and calling the middle of it. That's where the highest part of the volume is. So it's not as accurate, and it's a little bit more aggregated how it's displaying everything. Even if you change the settings down inside of TradingView to the tick, you're not really getting that as granular detail. So it's just something to keep in mind. It's really not the end, but just depending on how serious you want to take your trading and how important it and the level of accuracy you're seeing, you might want to evolve and move off of TradingView into something better, or for the purposes of learning this, it's really not going to be the end of the world for you. All right. Now, like I said, when we're looking at these LVNs and HVNs, this is very zoomed out information because we're bringing in a lot. So we can't look at this chart and see 30 minutes or 15 minutes or drill into a 3-minute chart that we want to trade off of because everything would just be way too large. So we mark off these levels, and then we just want to mark these levels once we've identified where these low and high volume places are. We just want to then either draw them on our trigger chart, so the chart that you're actually going to be trading on. You just draw those at the same places. Or if you're using a charting package like Sierra, you can just mark them here and then they automatically can copy over to your other charts. You might be able to do that inside of TradingView as well. I'm not sure if that's a feature, but if that is, then set up your chart in a way to when you draw it on your composite chart, have it just copy over automatically to the chart you want to trade on. And if that's not an option, it's not the end of the world. You can just manually know that these are your high volumes and just draw those at the same levels. Okay, looking at and coming back to the screens here, if we're looking at these LVNs and HVNs, let's just drill into some of this action. So specifically down here in this 09 area where we have this LVN, this 60 to 80 area where we have this high volume, and then up here closer to the mid 30 area where we have this next LVM. Most recently, we've just spent a lot of time traveling all around to this spot. So let's just kind of drill into this area specifically and make some observations about how this has been reacting. So here's a day where we opened up right in line with this LVN area. We had one strong push above. We rotated back down. This is all happening right around the open. So we push above, we test that LVN, hold it beautifully, and then start working our way up and come right back into this high volume area above us. Gets a little choppy down here, but this is also was an incredibly volatile, wide-ranging day as well. Here's an example where we're under that level now. This was the next high volume below us. So we spend some time around here, we work our way up. We come in just shy of that LVN and then work our way back down to this HVN. And if you remember, this 09 and then just below that, this little area right here is an LVN area. It wasn't as specific on TradingView, but you could see those more details. So it looks like we missed that slightly. And I think TradingView actually split the difference. So it put the LVN at the 07. So on TradingView, it probably hit that to about the tick and then moved its way down. So you might find some instances where having a little bit less of that detail might actually be a benefit. In some cases, it won't be, but potentially sometimes it will. So maybe there's a nice trade-off there. Here's a place where we open up and we're back above that 0950 LVN. We work our way down. We really don't get that close to it at all. And then we come back back into this high volume area again. And that's fine. Not every time there's a HVN or an LVN, we're going to have the ability to get all the way to those levels. Just need to be prepared for that. Sometimes we'll see it. And even as this is potentially moving away, we can understand that line in the sand is on deck. If we can push into that LVN, we want to be looking for the entries as long as we're holding above it. And maybe that idea just never gets there. Excuse me. And there's not a way to take advantage of it. Here's an example where that next HVN above us, up here in the mid 30s, we open above it, we drop down, we test it, and then we break that down and move away from it, coming all the way back down into that high volume area below us. Here's once again where we're below that 09 LVN again. We open just below it in a gap from the previous day. We push higher, test that LVN beautifully, come down to close the gap, work our way all the way back down, and come all the way to this next high volume below us. Now, as we're switching to this area, we could sift through a lot of different examples of this. It just is a very repeatable pattern that presents itself. And some things to keep in mind. It's normal for these LVNs and HVNs to be quite far away. This area that we're highlighting has been a lot of volatility and we've been covering a lot of distance. So not always. A lot of times we'll have nice LVNs and HVNs that are much closer. But some things we need to keep in mind is just time of day and if it's reasonable to expect we're going to be traveling that much distance. In a situation like this, we traveled quite a bit, but this was right in the first part of the day where we were testing this LVN. And as long as we're holding below this, there's enough time and day and enough range left on that day where we can expect that to be a likely target. But we might find ourselves in a very similar situation. But by the time we maybe get down below this LVN and retest it, there might not be that much time. Maybe there's an hour left in the day, and maybe we've already covered 50 points worth of range already. And so the idea that we're going to be covering all of this in that same session might be a little bit outside the realm of what's possible. And you'll notice this a lot. We might find ourselves in a situation like that where it's a little bit late in the day, we've already covered a lot of distance. We might hold down a nice LVN, maybe end the day somewhere around here, and then in the overnight session, work our way down and finish getting the rest of the way there. But potentially we don't have the juice to make it for the regular trading hours, or maybe the time that you're going to be staying on the screens. So just some things to keep in mind. What we're looking at here is a very simple trade idea. These LVNs, they just work as beautiful lines in the sand, beautiful places for support and resistance. And then we can just be adaptive to, as long as we're holding above these levels, recognizing that we're likely to move to the next high volume above us. As long as we're holding below these levels, we can expect a return to the next next high volume below us. And then we'll just see this shape up quite often. And like with any of our trade ideas, these aren't going to surface every single day. And the purpose of having a trade idea is not so every single day we just come in and execute the same thing, but we want to have a nice small range of trade ideas that throughout the course of the day, um, potentially several of our trade ideas will shape up, and then we can look to execute these as the days progress. So here's some key ideas about what we talked about today. We looked at composite profiles, the idea of bringing in months and years worth of data, and how we draw them, specifically anchoring these to key highs and lows, making sure that we're including all the range of the days that we're trading so that we're not missing any of the information. Of all the ways that we could potentially use a composite profile, we really just want to focus in on these low volume nodes and these high volume nodes. Understanding that these high volume nodes make excellent targets as they are popular prices, places the market likes, places the market is likely to return to. And these low volume nodes are unpopular prices and work as very good support and resistance, great for entries, and specifically separating out those distributions, lines in the sand. That's where the name comes from, the line in the sand trade idea. And this is fairly simple, very powerful, and you can look to start making these observations and incorporating these into some of your trade ideas starting from now. Okay, so you can take some time and process this. We covered probably a lot of details fairly quickly, so feel free to watch this again or just make sure that you're not missing any of the key pieces before you go out there. And then you can start putting these into use. I'll be excited for you to start using those. And then when you're ready, I will see you in the next training session.